Yo, welcome traders. Welcome to the TBX Trading Mentorship. And in today's video, we're going to look at something called Fibonacci Retracement. So initially, I was trying to make this video, and I kept canceling it over, over again because I wanted to teach the concept of premium and discount before teaching with Fibonacci retracement. So at the end of the day, I just decided to just talk about Fibonacci retracement, and along the line, we're going to talk about premium and discount. So what is Fibonacci retracement? Fibonacci retracement is a tool, not an indicator. If you check out the first week, the TBX mentorship book, we talked about difference between indicators and tools. So Fibonacci is sorry about that, is a forex tool used to predict or used to try to predict the retracement, as the name implies, Fibonacci retracement. We use this tool to try to predict the retracement in a trend or the pullback in a trend. So if you look at this bullish scenario, you can see this momentum move or expansion move to the upside. Then when we draw the Fibonacci from this low to this high, we can use this Fibonacci move to predict the pullback. Okay, as you can see, in this two golden line is where I was expecting price to get to. Then price came into this golden line, then or orange line or whatever, then move to the upside. Same thing in this bearish scenario. You can see after this expansion, we use this Fibonacci to predict the retracement or the pullback before price then continue trend. So it is usually not always like this, but this is the major concept about Fibonacci retracement. So let me just, I don't know, I'm sorry, I should have the price levels. Sorry, is it levels? Yeah, the level. This is the 100%. This is the 0%. This level is the 62.0 percent, and this is the 79.0%, and this is the 50%. So initially, when I wanted to talk about premium and discount, let me just brush around it. Just note these in an uptrend, anything above the 50% is premium, and anything below the 50% is discount. This 50% is the equilibrium, and as a forex trader, you want to buy in discount, not equilibrium. You want to buy at discount price. Everybody wants to buy at the cheapest price and sell at premium price. That is, you want to buy at a low price and sell at a high price. So the Fibonacci retracement is just going to help you to note when price is in discount. So when price is discounted, it means that price is at the lowest price or is at the best price to buy, then sell at premium. Same thing for a bearish scenario. You want to sell at premium and buy at discount. So you want to sell at the highest price possible, then buy at the lowest price possible. That's simple. It's the same thing both sides. So if you want to add this Fibonacci tool to your trading view or to use your favorite tools, yeah, so you just come to this the third here, click on this small arrow, then you're going to see Fibonacci retracement. So you start it. When you start, it's going to be added to this. When you click on this start, it's going to be added to this it's going to be added to this quick, is it quick tools or whatever I call it? Let me check in there real quick. Yeah, favorite join tools here. So once you click on it, then you're going to get this. But once you click on it, you're actually going to get the default. You're going to get the default tool. Let me show you what the default looks like. I want to get something like this. I'm going to get something like this. So this is weird and disgusting to me. So but if you want to use the same Fibonacci I use, if you want to use the same thing I use, or you might not see the difference because I've actually not shown you how I use it. Personally, I don't really like this percentage stuff showing since I already know what it is. But if you like to keep it on, you can. So let me just double click on this. So just double click on your Fibonacci, then it's going to bring you to somewhere like this. So just put in all these figures. Yeah, you can change the colors to whatever you want. Yeah, and if you want the price levels, let me show you guys. If you want the price level, just toggle with this on and off. So whatever you want. I try to like it off. So if you like background, I'm not really interested in backgrounds, but if you like backgrounds, then I think that's all for installation of this. And the best when you are done, I like saving. Try to always save your drawing template so that you don't have to. So you know, I try to save this as black gold. For instance, now if I draw a Fibonacci, because okay. In case, let's say, sometimes I really like to calculate 50% of a particular stuff. Initially I actually use dark mode, so this one is in white. So I'm just changing to black, black. So maybe you're using this for a while and you want to come back to this, you can easily just use your template to come back to black, to whatever you want it to be. So now let's jump into a chart to see how this Fibonacci retracement actually works. So let's look for a particular trend. For instance, let's use this trend. Let's use this trend. So the theory behind Fibonacci retracement is you need to see a break of structure or a change of character or a market structure shift, anyone. So a break of structure, let's just show you the difference. A break of structure, something like a break of structure, boom, this is a break of structure. Where's my, yeah, that is a break. Oh my god. Okay, that's BOS. That is too big. I hope you guys can still see it. So that's a break of structure. Hello, what's that? Oh, did this cancel? BOS. $16. Save. Okay, now why a market structure shift, which is also the same thing as the change of character, is if price was moving in a particular trend and we have something like boom. This is a market structure shift. I'm going to do a revision to those who might have forgotten what it is. So market structure shift, MSS, or change of character, which is COCH, and one you want to use. So market structure shift is the market structure shift. So the first thing you need to see before you use a Fibonacci retracement is either a break of structure or a market structure shift. So once you've seen a break of structure or a market structure shift, you are going to then draw your Fibonacci from, if it is an uptrend, if you see a break of structure in an upside, you're going to draw your Fibonacci from the low, the current higher low to the current higher high. That is the current swing low to the current swing high. So I'm going to take my Fibonacci and I'm going to draw it from the swing low, which is 0, to the swing high. Now, once I've drawn this, I'll now be waiting for price to get below this 50. I'm not going to look for trades. If something like this happens, I would most likely not enter this trade, except for certain reasons. Maybe there's a very strong order block somewhere around here. Don't worry, we're going to talk about order block later. So, but that'll be the reason why I think I'll take a trade from somewhere like this. But most of the time, I usually don't take trades like this. I try to wait for price to. I said something earlier that we want to buy at the best possible price. So and in an uptrend, we want to buy at discount. That is the best possible price. So actually wait for price to come below this 50%. So this gray line is the 50%. Don't forget that. So once price has gone below this 50%, it is now below equilibrium. But we want it to be at discount. Personally, to me, discount is when, just to make it easier, let me on these levels. Personally, discount is when price is below the 62% retracement level. This is the 62% retracement level or the 79% retracement level. So when price is inside this, I will now start looking for reasons to buy to the upside. But don't worry, I'm going to talk about entry reasons later on. So the same thing for a market structure shift. This is price is coming from changing from an uptrend to a downtrend. So once we see this market structure shift, and we now see that the price is now moving back, so we are just going to draw our Fibonacci retracement. This one is going to be opposite of this, from the top to the bottom. That is from this swing high to this swing low. One of the reasons why I usually mix up these higher highs, higher lows, lower highs, lower lows is because most of the times I really don't see those stops anymore. I just call them swing highs and swing lows. So you get, so I'm actually used to calling them swing highs, swing lows, and call them higher highs, higher lows. So but you just have to get used to it if I make any mistake like that again. So now I'm going to be waiting for price. If I see something like this, I will most likely not take this trade because price is not yet below equilibrium. So we want to sell price at premium. We want to sell at the highest price possible so that we can make the most profit. So when price is just below above equilibrium, yes, we start. That's when we'll start looking for our entry. But what we will actually need is to see price inside our optimal trading zone, or optimal trading price, or optimal trading retracement area. That's the 62% retracement and the 79% retracement. So I just want to see price inside. The price can actually come all the way to these levels as long as the price does not break this high. Price can come all the way to this level. I don't really care, but I just want to see price inside this OTE, optimal trading entry area. So once price gets to this area, I'll be looking for sales to the downside. So it is actually that simple. So you can actually keep a screenshot of this. You can actually have a screenshot of this so that you won't. I think, let me help you guys take a screenshot, make a download image. So now let's go into live chat. So here now, what's the first thing we're going to be looking at? Since this is an uptrend, we're going to be okay. Since this is a downtrend to an uptrend, so the first thing we're going to be looking for is a market structure shift. That is the breakout structure that changes the trend from a downtrend to an uptrend. And we got that right here. If you look closely, you're going to see that there's a market structure shift right here. So for the case of this video, I'm just going to be writing it out. MSS, the market structure shift right here. So what's the next thing we're going to do? We're going to draw our Fibonacci from this low up to this high. Just trace it. Oh, let me just put it here. Up to this high. And as you can see, price did not get into this zone. Although later on in the video, I'm going to show you some stuff on why, if I was going to place this trade, I would most likely have put this here. If you jump down to the lower time frame, you're going to see why. But for the case of this video, we're just going to ignore this for today. So if you look at this now, price did not get below this 50% retracement level, and I can tell you the reason why, and the reason why I might have most likely still entered the trade. Price came to fill up this fair value gap. Don't worry, you guys are going to understand what that means very, very soon. So, but price did not come below this 50% retracement, and according to this strategy I'm showing you guys on how to use Fibonacci retracement level, we are not going to take this trade, right? It's as simple as that. So we're going to forget about this, no trade here. Then price did the same thing here again. Here now, it's actually a break of structure, no longer a market structure shift. That's when price broke this high here to continue this uptrend. It's actually a break of structure. Let's draw a Fibonacci once again. Then from here to this high, as you can see, price came below the 50%, then down into the 62% retracement level. So from here, we can now start looking for trades. We're going to talk about entry reason later on. So, and our stop loss is just be either below the 100%. I like to keep mine around the 100%. So it's going to be around the 100% or just below. But I try like keeping mine the 100%. Then you can take a target of only one. I like taking a minimum of 1 to 3 risk to reward ratio in all my trades. Yeah. Oh my god. So excuse me for a bit. Okay, I think we're just going to continue either ways. The network is very, very, very bad, probably because of the rain or something. So let's just continue either ways. So the next same thing happened here. If you notice, price broke this high right here. If you had brought this to this place, then you brought this to the high, you see that price did not get below this 50%. So no trade. And the same thing here too. No trade, I think. Okay, yeah, there's actually a trade. Price broke this high right here. It's a break of structure. Price broke this high. Then, if you look at it carefully, this is a break of structure. This is a retracement. This is another break of structure. This is another retracement. Then price broke, continued like that, like that. So if you bring this up to this highs, if you bring this up to this highs, and you zoom in carefully, personally, when you jump down to lower time frame, you're going to see this clearly. You see that price came up, then came into the 62% retracement level. Then would it have given us a 1 to 3 risk to reward ratio? I don't think so. I don't think it would have given us a 1 to 3 risk to reward ratio. Oh, I don't think I can use this at the moment because the network is very bad. So, oh my god. So the same thing goes for a downtrend. As you can see, it didn't really work here because price just came down. But let's look for a downtrend where you can actually use the Fibonacci retracement. Okay, I think the network is back. So let's look for a downtrend where you can actually use the Fibonacci retracement. Personally, I actually use it only for entries. So I don't actually use it on big time frames like this. I only use it for when I want to enter a trade. So I only use it to get my entries. Sure you get. So now this is a downtrend. This is a downtrend. Let's assume you already know that this is a downtrend. There's a market structure shift right here, but you really can't see it because this is a 4-hour time frame. So, but if you draw your Fibonacci retracement from this high to this, okay, from this high down to this, oh my god, you have to be kidding me. What the fuck? What the F is going on? Okay, let me just take this. Okay. If you draw your, don't forget you're going to draw it from the zero is going to be at the top right, at the top here, and the other is going to be here. So if you draw your Fibonacci from the top down to this bottom, you can leave it at the tip, or you can leave it at the body, whatever you want. So with a price to be traced into the, sorry, it should be like this. It's actually upside down. My bad. So something like this. Yeah, exactly. 100% zero. Then price retraced into the 62% retracement level, then down. If you do the same thing here, you see that you're actually going to end up, you might not miss this trade because price got into the 50%, price got into equilibrium. So it is not bad if you look for trades when price got into the equilibrium. Yeah, we're looking for discount price, but equilibrium is not all that bad. So if you bring it down to this, please don't forget break of structure, don't forget about that. Price retraced into the 63% retracement level. Then I know you guys might have noticed that price has been retracing into the 62% retracement level over and over. Yeah, personally, I like leaving my entries at, taking my entries at 62% retracement levels. I don't really like taking entries at the 79%, but I just leave it there just in case. So you guys get. So it's as simple as that. So the network is actually really bad right now. So I would have continued, but the network is actually pretty bad. But you guys get the gist. So you wait for a break of structure. That's this. I think this has actually explained it a lot. Just wait for a break of structure, then you draw from the lows to the highs, then you get your wait for price to get into or get below your 50% retracement level. Most likely into the discount, that is if you are looking for buys, or premium if you are looking for sales. So I hope you guys learned a lot. about Fibonacci retracement. Yeah, see you guys in the next video. Bye.